Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Great to see everyone. Hope you had a relaxing, peaceful, enjoyable weekend. We are back at it. Fall trading season. Action is back. Volume is returning. This is exactly what we've been waiting for. We got through summer. We day traded through the summer, shortening the time frames, not being reliant on longer term follow through, longer term opinion. And what do I mean by longer term? Maybe days, maybe weeks, right? And therefore, at this point in the month of September, we're monitoring volume to see if it's sort of stabilizing, see if that opinion's coming back. And therefore, the moves that we're seeing, I'll give more credence to than I might have in July, certainly would have in July or August. And therefore, the moves and the price levels we reach are more meaningful now than they would have been even 2 weeks ago, 3 weeks ago. Pretty good, exciting times, pretty good action for us traders. And that is what we're looking at. A couple things to kick off the morning. Let's make sure we're keeping an eye on the economic calendar. If you joined us for the weekly Raghee report, or whatever the heck I call that thing. I'm terrible at naming things. I should just run a contest for that. I think one of our Charts and Coffee watchers named Charts and Coffee, or was it Lorna Bot? I don't remember. But, I definitely want to make sure that as I start the week, that I put that economic calendar front and center to remember when the hot zones are going to hit and the catalysts for the high impact, high volatility moves are going to be. This week, we had nothing. It just seemed we had wall-to-wall Fed speak last week. This week, we've got CPI, inflation data, absolutely a macroeconomic pillar. PPI, ditto, another macroeconomic pillar. Core retail sales, we're going to wrap the week up with really more a look at the consumer, which is going to be important. I'd say it's just below jobs in terms of importance. And we're in that blackout zone in front of the September 21 FOMC meeting. So they're just going to shut up for the next week or so, which is welcome. All right. So that is where we are. Quick peek at the charts. Gap up on Sunday. Gap up is holding pretty well. Take a peek. Here's 8 p.m. right there. There's 8 p.m. Now, why not 6? We have our weekly show at 6 p.m. Why not 6 p.m.? Why do I not go back there? Between 6 and 8, we get a range, we get a gap. We have some fairly light volume trading. But by the time we get to 8 p.m. Eastern, Auckland, Sydney, Tokyo, Hong Kong, Singapore, we have much more participation, many more eyes, more important opinion, the turnover, the volume. And so holding through 8 to 4 a.m. when we have the Asian session close, really important. And we can see on that Asian session close, Europe's open, UK's open. We can see we've held that gap up. And by the way, here's your gap up right there. So we held it. Are we that much higher than the gap up? No, we're really not. But we held the gap, and that's worth recognizing. All right, so that brings us to your questions. So let's go ahead and jump into those. All right, kicking it off with, let's see there. Hey there, Jack. Do I believe we are still at the place in the market where, the video that I did, sure, where there is a light at the bottom of the downtrend. What did I call that? Light at the end of the downtrend, something like that I discussed several weeks ago. Jack, would it surprise you that we actually published that video and we were discussing all that in Charts and Coffee and in the free video 2 months ago. We pushed this out on July 7. So 2 months ago. Well, you know what? Let's see where the analysis put us. Sure. July 7 was right back. Let's see here. July 7. That was the day we pushed that out. Yes, I absolutely do believe that. I absolutely do believe that. And then we followed up with, I think at some point, and gang, look, there's no merit in calling targets, right? I call target analysis, it's not even analysis, it's clickbait. A target is not a trade. So whenever you have any analysis that's focused on this is where the market's going to go, ignore it. It's a hazard. It's a moral hazard. It's for all of us. And so it's all about patterns. It's all about risk control. And it's all about, well, let's say someone talks about a target. Where are you willing to get in? Put your money where your big mouth is, right? So don't please ever let me, if I bonk my head or I drink way too much coffee in the morning and I start talking targets and not setups, call the men in black, get the neuralizer because there's something wrong. If we kind of move forward through, let's see, I know we did a buy the dip video. There he goes. Buy the dip is back. And that was 3 weeks ago. That would have been, and this is a chronology of what it is that I'm doing, right? And that would be the 18th. Yeah, so there you go. Buy the dip is back on the 18th. So that's not what I wanted to do. Let's put another vertical line on there. So this gives you a good idea. If you drop a video, if you drop a line on the day that I have a video and just check out what's progressed, I think you can see, Jack, it's still very much for me what I want to focus on, the long side. And I think that prematurely calling tops, and that's what it would be right now. And by the way, Ron, do you think there's a resistance level that could be a problem? We get that you're bullish. You've been bullish now for 2 months. Clearly, you told us to start buying the dip about a month ago. All right, what's next? Do you really think it's up and away? Oh, no. Let's be realistic. So, Jack, thank you for the question. Take a look at this point of control. Call it 41.43. Really anywhere between 41.45 and 41.50. Major psychological level. Look at the volume. Look at this volume ledge here. That is a beefy volume ledge right there. And there's a point of control. That means let's see, how long has that point of control been there? Yahtzee. Since the beginning of the year, that level right there, 41.33, 41.30, that area right there, 37, 35, that's where the most volume is in this market. And there's one other level that I'll take a look at that I calculate. So if I were looking at the SPY, keep an eye on, so let me move over to the SPY and show you something else, because this is where we can look at how traders and investors are positioned with size in the actual underlying ETF, in the stock, if you will. Yeah, that's pretty interesting where we sit. What I'm looking at is 400. A lot of size sitting at 400. A lot of size sitting there. It's a major psychological level, so that's not too surprising. So it's a yes, but absolutely, I am looking at continuing higher if that ledge can be taken out. We might chop around after that ledge, but I'm not concerned. All right, next up, Julian asks, how do I calculate risk reward in dollar terms when I buy an option? It's based on the cost of the option, right? We pay a certain amount of dollars for an option, and then it's based on the amount of dollars of each trigger that when I send out an alert, many of you know that I'll have an aggressive level, a moderate level, and a conservative. That's something we've always done, both for day trades and for swing trades. The amount of dollars I spend at each option is going to dictate what it is I'm willing to risk in terms of each one of those levels. All right, next up. Oh, hey, gang, give me one moment. Give me one moment. Hey, sorry about that. Kara, come. Kara, come. Kara. Good girl. All right, sorry about that, gang. The dog just lost her mind. Lay down, pup. You're interrupting the show. Sorry about that. Go ahead, girl. It's all right. I have a very, very, it's all right, girl. Hopefully she doesn't freak out anymore. Okay, sorry about that, gang. All right, so the next question is Exxon. All right, let's jump on over. I completely lost my train of thought. You have a very healthy bark, baby girl. Yes, you do. Exxon. Hey there, Jose. Good morning. So if I'm looking at Exxon pre-market, we're sitting at 97.68. By the way, gang, I am using TradingView charts, and you'll notice that multi-trend, HPMRs, Wave Grab, Darvis, Propulsion, all the goodies are available on this platform as well. And we're sitting right at, look at that beautiful Darvis level sitting at about 97.70. Let's see here. Yeah. I would keep an eye on this level. It's an overall bullish market, but it's not yet an uptrend. So Jose, what I would say is, not that we can't buy dips in Exxon. Keep an eye on XLE, keep an eye on CVX, keep an eye on Chevron and the Energy Select SPDR ETF. They're really going to move together. And ideally, if we're going to see follow through, they're all going to move together as well. So what I'm talking about is this one and this one, right? So be careful there. I like the XOP. I like the FCG. I like the names that are a little bit more strongly tethered to natty than, say, crude, because, well, take a look at crude. Crude is in a downtrend. It's trying to shake it, but it hasn't quite yet. So be careful with XLE related names. I'd focus on XOP, IEO, FCG. All right. All right. Next up, good morning, is Amazon. Yeah, let's take a look at AMZN. Is it a possible swing buy? David, thank you for the question. So when I use the word swing, so this is just me, and I think it's important that we all sort of decode our secret language around trading. So when I'm talking about a swing, the word is for me synonymous with a retracement or a pullback or a bounce or a regression to the mean. So a swing trade is, first, it's got to be happening in a trend where all that terminology, regression, retracement, etc., is valid, right? Where that's all valid. And then after that, I need the pullback, but only if we have a trend. And I do not have a trend in AMZN. So as much as I might be interested in playing the long side, it would not be a swing. And you might say, well, Rog, I've heard that a swing trade is a trade that lasts, what, three to 5 days or something like that. I've never subscribed to that definition of a swing because I don't believe we project out in time how long a trade will last. We don't know. And it's hard enough to guess where price is heading and control risk along the way. Way more difficult to say, well, price is going to go here and it's going to do it by a certain date. That's a bridge too far for this trader. So what I would say is we want to focus on where the trends are, maybe in the XLY. And if you've been following the analysis, the trade within the XLY that I like the best is that post-split pullback in Tesla. And I've got that whole, I think we've got 2 or 3 videos dedicated to Tesla, pre-split, during the setup, and now here in the follow-through where I've described where some of the targets are. So that's really been more my preference in the XLY. Again, not a swing buy, but potentially a buy. Yes, I'm with you there. So David, and I appreciate y'all turning out for charts and coffee. Otherwise it'd be me and, yeah, you big mouth, little doggy. It'd be me and my big mouth dog, right? Okay, thank you for the question. All right, Ronaldo says, smash the like. I do appreciate that, Ronaldo. Absolutely, I do appreciate that. All right, next up, OXY. Hey there, Randy. OXY. It's clearly more bullish than bearish. OXY, probably I like BVN a smidge better. You see, they're in a similar world. So Randy, it's not that I don't like OXY, but I would say, OXY invited us to the party. That is XOP, right? Even FCG. Once I got to the party, I realized, okay, OXY, I really like some of your friends too. So DVN, and I know that's the way trading sometimes is. One name might introduce us to a group, and then we've just broadened our group. So OXY would fall a distant second to me to DVN, but I do like the long side. So you're mentioning the slow stow getting very oversold. The challenge is we have a really nice Darvis zone between, call it 66.35 and 62.90. So that zone coupled with, so that's a Darvis created zone, previous support and resistance projected forward, tells us where the market actually made moves to, through, or stalled at. Far more valuable than projected support and resistance. This is support and resistance that's using previous price and psychology to, again, project forward and say, all right, this is a zone because it's been a zone before. Add the slow stochastic, you're in shape, you're in good shape. But if I'm going to prioritize, when I'm looking at my watch list and I see all the names that are listed there, what I would like to see at the top of the list are trends. So I'm usually going to prioritize those trends. But a great corner of the market to keep an eye on, Randy. I like it a lot. All right. AJ says, how do I get the minor high-low arrows on my chart? Darvis 3.0. Darvis 3.0. That's the indicator that shows the pattern within the Darvis box pattern, and that's that minor high, minor low. All right. Next up, Pam asks, good morning. I recently learned that futures don't apply to the pattern day trading rule. Correct. I trade QQQ and SPY because they are affordable versus SPX. I don't touch SPX. So Pam, I've never traded SPX. Don't ever intend to either. Because to your point, I've got a far more affordable, very liquid market in the futures. And I've been trading futures for, gosh, over 3 decades. I like that market. It's a good liquid market. And I've got options on those futures as well. So what's the smaller version of ES and NQ? By the way, Pam, I will trade options on QQQ and SPY in the Sector Secrets Mastery in a cash account. So we will day trade them. We will often swing trade them. If you're trading in a cash account and you are focusing on affordable options, long calls, long puts, you don't need a margin account. And in a cash account, there's no pattern day trading rules. That's the workaround that I've used for a very long time. Then as far as the smaller version of ES and NQ, MES, that's your micro, MNQ. That's also your micro. And those are less margin requirement, less dollar per tick. And they're a great place to, I think, sort of understand the nature of futures. Highly leveraged, can be pretty volatile, and control risk while you're sort of, while you're getting used to the action in futures. I'm a big futures fan. Absolutely. All right. Next up, Jimmy asks, did the market already take into account the potential new interest rate of 3.25% to 4%? Well, we can know that, right? I love the question. Head on over to the target rate probabilities. Take a look at December year end, and the answer would be yes. We are 8%. This is the highest this column has been. Let me move this up so you can see what I'm talking about a little bit better. There we go. This is the highest this column has been, I believe, all year. This is the December target rate probability. 8% more. Once we reach the 80 threshold, I consider that, quote unquote, fully discounted. Up until then, it's clearly the most probable. And then once it hits 80, that's just, as we like to say in trading or in investing, it's baked into the cake. The broadest group of people at that point just accept that's where it's going to be. So my answer to that would be based on not what I think and not what my gut says and all those things. I love the question, Jimmy. Yes, based on the data. I'm with you there. All right. Next up is, let's see, Joseph. Joseph asks, I have a question for you regarding the short video where I talked about high-low pattern. I understand the basic pattern, of course. What's the entry? It's a breakout. It's a breakout entry, Joseph. Yeah, it's a breakout entry. All right, next up, PP asks, TSM by the dip. Okay. All right. All right. TSM. SMH name. I don't love. So PP, considering that, yeah, considering that SMH is the overall sector, and I don't love it. It's just barely hanging on to neutral. Taiwan Semiconductor is your number one way to name. So it's hard to like TSM if I don't like SMH. And by the way, vice versa. Could we go long? You could. I just can't find a really clean level for it. So you're going to have to rely on some patterns for that. Let's see what else we find here on TSM. Let's take a look at the daily time frame. So neutral market, at least we're not trying to buy a double red downtrend, right? That's always important. And then you have a minor low right there, kind of going back to Joseph's question. It's a breakout entry through basically 80, right? So Joseph, that's another way you can look at the minor low breakout. And by the way, my Sector Secrets Mastery folks, I'm going to see you all in about, oh gosh, I'm late. I'm going to see you all right now. So if you have questions about any of the trades or patterns or whatever, I'll see you all in the chat room in just a moment. Gang, thanks as always for joining me here in Charts and Coffee. I'll see you tomorrow. Same time, same station, now almost for 2 years, right? So thank you all for joining us for the pre-market show. I do appreciate your time and the questions. I'll see you tomorrow. Be good to each other.